Hello guys, welcome back to TKB YouTube channel, the home of technology and money making ideas. Today, I'm going to be teaching you guys a very simple strategy to catch spikes on boom and crash, which is very effective, guys. So I assure you, by the time we finish this section, we all will be able to catch spikes on our own whenever we want to trade on boom and crash. So we start. This strategy makes use of simple indicators, and it doesn't need much experience for you to start earning with this strategy. So right here, I'm going to explain each indicator for you guys so you will understand how to use them and also how to implement them whenever you want to start trading on your own using this strategy. First of all, we have to understand the meaning, the names, and the significance of these indicators. So starting with the Bollinger Band. The Bollinger Band is the green line here. You see this three green line, this 1, 2, and 3. These three lines are known as the Bollinger Bands. So in boom and crash or in MT5, they actually help us indicate the support and resistance. So for example, if you go to the 4 hours time frame or any time frame at all, this Bollinger Band marks indicates the support level, while this the upper one to be using to catch the sparks. Then if you look beneath, you notice an orange colored line. This is also a moving average. But this moving average is used to know the trend of the market. It tells us when the market is in uptrend or downtrend. For example, this is crash 1000 or in any crash market at all, be it crash 1000 or crash 500. If the market is trading above this orange colored moving average, it indicates uptrend. And if it is trading below the orange colored moving average in crash indices, it indicates a downtrend. Same thing happens in boom. You can actually see this. The market is trading below the orange colored moving average, which signifies a downtrend. So guys, let's start. Let me show you guys how this strategy actually works. So first of all, we're going to be making use of the 5 minutes time frame. We're going to make use of the 5 minutes time frame. This strategy is very simple and effective, guys. So I want you guys to focus very well and take this video very serious. And by the time I finish this session, I'll show you guys you really learn a lot, and this strategy is going to give you a lot of money. So to get our entry points, we're going to be making use of the 5 minutes time frame. So this is boom 1000 index. So what happens here is this. We look for a place where the market has traded for long has started reversing. So looking at this market here, you can actually notice that this market is on downtrend because it is trading below the orange colored moving average. So again, you can see what happened there. So same thing I was telling you guys, this market was on downtrend. You can see this is 5 minutes, so it was on a serious downtrend, going downwards. And once it reached this point, it started spiking. You guys can see that it was spiking. It wasn't even coming down again. Like it was just spiking up and up. So whenever you see this kind of thing occur in the 5 minute time frame, so especially once this kind of thing has occurred or has happened, you notice something like a spike here. That's after this market has traded down for long, then it started spiking up. And so most times maybe it wants to cross the moving average. That's the one for trend, the orange colored moving average. Whenever the spike touches or crosses it here, so what we do is, let's mark it here, guys. Let's mark it. So this is it. So we go to the 1 minute time frame and look for the line, guys. Let us look for the line that we marked just now. Alright guys, that is it. That is the line we just marked. Okay. So whenever you notice such thing occur, you go to the 1 minute time frame, and once in the 1 minute time frame, guys, what we do is, I told you guys earlier that we make use of this red moving average to catch the spikes. So you wait. Whenever this market has touched this red moving average, whenever the candles has touched this red moving average, you place your trade immediately. Most times, the spike can actually occur here, somewhere here. Look where I'm pointing my arrow, somewhere here. But it wouldn't pass, or it shouldn't cross this middle Bollinger band here. So the spike should occur somewhere between this red moving average and this middle Bollinger band. So you guys can see what happened there. A spike came here. Then when it touched this red moving average again, another spike came. Then when it was trading again, another spike came. Here again, another spike came. When it touched this red moving average again, another spike came. So you can see that if you had placed trade here, if you had made your entry point here, you should have caught all these spikes. And to know your exit point, guys, what you do is you will observe or look for when the market is crossing the red moving average and also crossing the middle Bollinger band without any spike. Then you know that this is your exit point. Or another way to know that you should exit the market is observe when the red moving average here, that's this moving average here, has crossed the middle Bollinger band. See, look at what happened here, guys. See what happened there. It just crossed it. So if you observe from here to here, it didn't cross this Bollinger band, this middle Bollinger band. So the Bollinger bands are trend lines. So the middle one if the middle one is crossed by the red moving average, then this is a sign for us to exit the market. So guys, this is for boom 1000. So let's move over to crash. And remember guys, this also works for this the one for 1000 also works. It also applies to boom 500 too. So they are same thing and they work together. So another thing again is the crash market. We also make use of the same method. We move over to the 5 minutes time frame. So you guys can actually see what happened there, guys. You can actually see what happened there. So this market, sorry guys. So this market was on uptrend. You can see it is above the orange colored moving average, which is for the trend. So that which signifies uptrend, okay? And this is crash index. This is crash 1000 index. So it has traded for long, and the moment it reached here, you guys saw, you can see what happened, okay? It dropped. It started dropping, like it started dropping drastically. You see what happened there. So whenever you see this kind of thing occur, whenever the market has traded for a very long period of time, okay, then and has started and reached a particular peak or a particular point and started dropping or starts to drop, then what you have to do is we mark the we mark the place for this the drops. That's the place this drop started, the place the market started dropping, which is here. So we mark it here, so you actually know the place in 1 minute time frame. And meanwhile, guys, if you observe your RSI relative strength index, you notice that this market is in the sell zone. If you see observe in the boom market, you see notice that the market is in buy zone, which is an unsafe zone for that market. Crash is for buying, then boom is for selling, and you know that we are trading against their trends, okay? So if crash 1000 is for uptrend, we are trading for the drops. If 1000 is for downtrend, we are trading for the spikes. So that is how it was, guys. So we move over to the 1 minute time frame. Let's look for that line that we just marked on the 5 minute time frame, okay? So this is it. This is the line that we marked, okay? Remember, this is the line. This red line is the line that we marked to indicate where the market started dropping, okay? So see guys, see what happened here. Immediately the drop started occurring as we headed over to the 1 minute time frame. You can see that immediately the market touched the candle. Immediately it traded to the red line here. It spiked. It touched the red line. It spiked. Here it spiked. Here it spiked. Then you see remain in the market here. Another spike again, guys. So you guys can see what is happening here. Can you see? Here again, it spiked. This spike even came without touching this red moving average. Okay, so guys, look at what happened. I told you guys, remember that whenever the candle trades above the red moving average, crosses the red moving average, and also crosses the middle Bollinger, which is this one here, and you notice that this moving average started pointing upwards and it crossed the middle Bollinger band too, which happened here. Okay, this is the time for us to exit the market. It's an unsafe zone for us, and we shouldn't place our trade there. We should actually exit the market, guys. So this same thing applies. In crash 500. So this strategy is very, very simple, and it's very, very effective. It is working very, very fine. In fact, I will call it 99% because it tells you what to do. You can actually see what to do and what not to do. You don't want to exit the market when you are in your safe zone, or when you are safe to buy or sell, or when you are safe to place any entry or to open any position. Okay, so guys, to get the full strategy, or to the full setup on how to use this strategy, okay, if you want to get the full setup and the parameters of these indicators, kindly reach out to me. You make use of the email in the description. And remember, guys, we published a robot earlier, a mobile robot that trades spikes, okay, a mobile robot that trades spikes, so you guys can actually remember. The robot is still working. It's very, very effective. This robot only indicates, so an example of the robot is here. You know, it gives you signals when the spike zone has reached. Example here, it says crash 1000 index sell spike zone reached. So it gives you signals, to place your trade, or it tells you when the market is in the spike zone, when crash indices, any of the crash indices is in the spike zone, or the boom indices is in spike zone. So for you to place your trade and catch spikes. So that one is for those who do not have time to study their chart, or to analyze their charts. You only have to wait. You only have to wait. Keep your phone or data on. Then, whenever you receive the notifications, you place your trade, because the robot always alerts you. You receive a notification sound that yes, this market is in sell, is in spike zone. Place your trade. So that is how the robot works. This is the mobile robot. It works only on mobile phones, be it iPhone or Android. As far as that's a mobile phone, it works effectively and perfectly well. So guys, please don't forget to like this video, share and subscribe. Also recommend my YouTube channel to your friends, so that they can actually tap in and get my amazing videos and learn my new updates, guys. Don't forget to click the notification bar or button or bell, so that you can actually receive my updates whenever I publish a new video. Thank you, guys. See you next time.